Hi, Don Bishop, Executive Editor and Associate Publisher, AGL, Above Ground Level. What a deal! We're here in Kansas City, Missouri, at the Country Club Plaza, the home of the Kansas City office of Media Venture Partners. That's where the magic happens. Media Venture Partners. Here's a FedEx driver leaving the MVP office with packages filled with millions of dollars to finance wireless infrastructure mergers and acquisitions. Let's go inside and see how much money is left. Not too much. Clayton Funk, Jason Nicolay, and Ryan Carr wrote the September 2013 Tower Market Report article, Trends and Forecasts for the Wireless and Tower Industries.
My name is Clayton Funk, and I'm one of the managing directors at Media Venture Partners.
What is Media Venture Partners?
Media Venture Partners is a boutique investment banking firm specializing in areas of telecommunications, media, and technology.
How did you get started in investment banking?
In many ways, it was really good fortune. There were some guys that I'd gone to college with that had formed a boutique investment banking firm here in Kansas City that I was with for about 7.5 years called Nations Media Partners. And back in 1997, they contacted me and asked if I would like to help them start the wireless tower division because they felt there was an opportunity for an intermediary to help represent sellers, primarily in selling their tower assets, but as well as look at doing some capital raising as well.
Why do you like to write the Tower Market Report?
We're very flattered to be asked to do the Tower Report every year. You know, I think it's one where we definitely get a lot of comments on it from our clients and prospective clients and other people in the industry. So, you know, from our standpoint, it's very good exposure, and again, we're very flattered to be recognized as people who can offer that to the readers. For us, it actually does give us the opportunity to take a step back, look at what we wrote last year, and say, I wonder what's changed, and for us to be able to go through and be able to edit that. You know, fortunately, over the last, again, probably 2 to 3 years, we've been able to say the same things. The market's hot, prices are high. You know, the future is incredibly bright and almost limitless for the tower industry. So, you know, maybe it's good luck and karma that we can continue to write this, and hopefully nothing bad will happen to the industry.
Here's something that happened. After you wrote your article, AT&T announced it wants to buy Leap Wireless. What effect would a purchase of Leap Wireless by AT&T have on the tower industry?
It's great news in the fact that people have questioned the creditworthiness of Leap as far as a tenant on the towers, and I don't think that you're going to see any sort of wholesale decommissioning of sites. I mean, you're adding a whole bunch of subscribers onto the AT&T network. The AT&T network has historically been very constrained as far as capacity, especially with all the data usage, and you know, I think it's good in the fact that instead of having maybe AT&T as a great tenant and then, you know, Leap as somebody who would say is a little more suspect as far as a creditworthy tenant, you may have AT&T paying for 2 leases, and AT&T is a very, you know, sought after tenant for tower owners and tower buyers. So I think it's a positive overall.
Multiples. Everyone wants to know, what's the trend for multiples?
Multiples have stayed really steady over the last year and a half, maybe even 2 years. And I think it's probably more important to take a step back, because whenever we get asked the question about, you know, what are towers worth, what are they trading for, and what are the multiples for towers, you know, we can give an answer. However, it's more important, I think, to look at, you know, what do the towers look like, because the multiples for a fully loaded tower where there's no more structural capacity or maybe no more market potential for tenants is very different than the multiples paid for what we call as immature towers that tend to be new, maybe built for the anchor tenant, and that's the only tenant on there, but there is still some structural capacity remaining in the tower, as well as, you know, we think and a buyer thinks there's going to be more market upside as well for future tenants. So the multiples have stayed what we see as high, and we can do that based on historic comps, you know, over the last, say, 16 years of brokering transactions. So, you know, they've stayed flat, but they've stayed high, which is great. But I think just being able to come right out of the box and give a specific number, we can do that, but we usually have to learn a lot more about the assets themselves.
If you could change one thing about the tower industry, Clayton, what would you change?
I think in many cases I would make it easier for individual tower owners to be able to build towers instead of having the carriers build it themselves, or be able to, you know, actually outsource to maybe a large national tower company to do all the builds. And I think that's for several different reasons. One, I think selfishly, a lot of our clients would like to build more towers, and the more towers that they build, then the more capital they'll need, and hopefully we can provide that, help them find that capital, or hopefully then the more towers they build, they'll sell more towers down the road, and we'll be able to assist them with that. That being said, also, and there's some joking aside in there, what I do hear from a lot of our clients is that they can best serve the carriers by building the towers for those carriers. They are being able to do it faster than some, whether the carriers themselves or even some large national tower companies. They're able to do it, not only faster but less expensive, and I think be able to have a level of detail and service to their clients that maybe the clients don't always appreciate, and that's why they'll either, again, build it for their own account or outsource it in large buckets to national companies.
And another author of the Tower Market Report.
My name is Jason Nicolay. I'm a vice president with Media Venture Partners. Within MVP, I spend my time in the telecom group, which primarily is towers, spectrum, and wireless operators, and work on a lot of sell-side projects with owners and entrepreneurs in those spaces.
What brought you into this line of work?
I started out actually as a CPA that had a client that was doing a significant amount of work in M&A, and I knew from being on that side of it that I actually wanted to be on the front end of the deal, working for clients and helping them secure the best price and actually be able to work on the deal, and haven't regretted moving that direction ever since.
I asked this of Clayton. His perspective has more to do with towers. Yours may be more wireless spectrum. How do you view the proposed AT&T purchase of Leap Wireless?
AT&T is the recent acquisition of Leap Wireless is, I think, in my opinion, is largely driven by their need for additional spectrum in highly coveted top 25 plus markets, where they'll be able to secure a significant footprint in AWS. That footprint provides a lot of value for them. It also helps their network once they're able to convert the subscribers from CDMA to GSM, and that'll be, is a very valuable transaction for AT&T in terms of their network and spectrum needs going forward.
Who do you think is next to be acquired?
It's a great question, right? There's, as you look at the wireless landscape today, the big four wireless carriers, AT&T, Verizon, T-Mobile, and Sprint, collectively make up about 96% of all wireless subscribers. And the remaining 4%, 2% of that is US Cellular. And these are all wireless devices, so it includes iPhones, smartphones, tablets as well. But it doesn't leave a lot of room for a significant amount of growth in terms of being able to go acquire another Leap. US Cellular is probably an attractive target to some given their spectrum, but they tend to operate in rural markets. C-Spire is another large operator, and from there, there's the Competitive Cellular Association, which contains a lot of its members are the wireless operators in rural kind of tier 2 and tier 3 markets, and they're kind of the next frontier, and they serve a much different customer than the customers in New York or San Francisco, for instance. A new wave of transactions could be actually MVNOs, as carriers tried to acquire subscribers that don't need networks. So there's a growing number of MVNOs out there, which will be attractive at some point, as they're really at this point people are cannibalizing each other's subscribers because there's not a ton more subscribers to go acquire.
Jason, if you could change one thing about the wireless carriers, what would you change?
I don't know if there's anything I would particularly change. I think carriers are dealt with a difficult challenge of meeting consumers' needs, which are constantly are moving faster than what it is their ability to deploy a network. Consumers are driven now to watch a YouTube video or upload their own YouTube video to Facebook or whatever it may be. So there's a large demand for data-intensive applications and uses for that in order to connect with your friends and just generally tweet about your life, right? And so I think the biggest thing is being able to deploy quicker. But they're deploying, if you look at the U.S. from a domestic standpoint, we're moving faster than most of the globe in terms of being able to deploy an LTE network. And really, quite frankly, we're all the carriers are doing a great job at being ahead of the curve in terms of where the globe's at. And they've got a tough challenge to keep up with consumer demand.
If there were one thing you could change about Clayton Funk, what would you change?
He's got a great name, so I don't know if I would change anything. He needs to wear a little bit more funkier clothes, maybe a blue tuxedo with a top hat would look great.
Clayton, if there were something you could change about Jason Nicolay, what would you change?
I changed the fact that he's a KU graduate. I changed the fact that he's a KU fan. He needed to go to a different school, probably like Washburn University would have been suited better for him. Division II athletics is something that he should have more of a affinity for. And I think something like KU, he wasn't in a good fraternity. And, I think that's really affected him for his entire life.
I'm back outside already because I'm just that fast. Media Venture Partners has an office in San Francisco. Everyone wants to know,
Ryan Carr, are you there?
Are you there, Ryan Carr?
Yes, I'm here. Glad to be with you.
Ryan, we have you by special long-distance hookup, a modern technology that's incredible. What stands out from the Power Market Report research?
I would say probably the most outstanding, the most astonishing piece of data is just the growth of the projected growth of data for the next 5 to 6 years, and how smartphones are really kind of revolutionizing the wireless space.
I'm sorry to have to say that Clayton and Jason used up most of the available time. It's all the time we have for you, Ryan.
That stinks.
Yeah, it kind of does. My thanks to Clayton Funk, Jason Nicolay, and Ryan Carr of Media Venture Partners. The Tower Market Report, September issue of AGL Above Ground Level. We're here on Country Club Plaza to visit the Kansas City office of Media Venture Partners and the rock star of the investment banking industry, Clayton Funk, the pop star, Jason Nicolay, and Ryan Carr. Well, he's not here. He's in San Francisco, and I never heard of him before.
Well, you stink.
That sounds about right.